Hey everyone, I'm Cary Smith and I'm sitting here with Cheri Turner.
Hi, everyone.
And Cheri and I are both with Client First Capital. And Cheri, we have such a timely topic for today. We're talking about turning tariff volatility into opportunity. And technically, it's market volatility into opportunity. But the tariffs are really the trigger in what we're seeing with all of the volatility that we're seeing today. So we've got quite a bit to talk about. I think a really good agenda and discussion points. So I'll let you kick us off.
Great. So what we see happening in the markets today is what we call blanket fear. When there's a massive announcement like this, people respond with broad reactions, meaning they sell off everything oftentimes. So that means that we see a drop in both the high quality as well as the low quality stocks. So one of the things we can look at here, if it's okay, I'm going to share my screen. We're going to take a look at what happened back in 2018 to 2019 tariff announcements against China in that particular instance.
Yeah. So while you're bringing that up, just to say it, again, what we typically see is when news like this hits the markets sell off, right? And they're selling the good and the bad. They're not
Exactly.
discerning what should be kept and what shouldn't. It's just we just see everything go down. And then,
Right.
here's a really good example of that. So I'll let you speak to it.
Yes, absolutely. So this is about the point in time at which we saw the tariff announcement hit and the markets respond. And so the markets dropped pretty significantly. During that time, we also saw about a 10% drop in Apple. One of the things that we see in this chart is that the markets then on to recover in a pretty short period of time. By mid-2019, they were recovered, and then even more than recovered by early 2020. So it didn't take that long to recover. But another thing was during that time, Apple stock actually lost about 10%. And what we know is that Apple has obviously more than recovered during that time. So what we see is that would have been a really opportune time to get in and buy certain stocks like Apple that are known to be high quality, but that are also dropping. I'm going to go
So
ahead and
if you were back in 2018, 2019, and you were in the middle of this occurring, there might be stocks in your portfolio that maybe you should get rid of, but there are
right,
probably a lot in there that you should hang on to, right?
right,
And Apple being a really good example of that.
right. So the key is kind of, that you can see a temporary drop even in companies with strong fundamentals.
Yeah. Yeah. Okay. That's a good takeaway. So, so why do disciplined investors turn fear into opportunity? And we've heard this so many times. You don't want to buy high and sell low, right? But whenever panic sets in, that's what some people do. Um, they they feel that this time is different than previous times, right?
Right,
Even though historically we've always felt like this time is different, even though when we get past it and we look back, it's just like every other time, at least in how the
right,
market responds and how the market recovers. And because they feel that the bottom may still be a far way away, right? And so they
mm-hmm.
kind of have that I'm
Mm-hmm.
going to cut my losses mentality. And so
Right,
but the disciplined investors and the ones who typically come out on top in the end, they do have some attributes that are common. So one is they stay calm. And I don't care
yes,
what the situation is, if it's in the market or if it's a crisis in your business or whatever. Staying calm is probably the first order of business, right? Just stay
absolutely.
calm. It makes it easier to analyze and think about the situation. And then the second piece is stick to your fundamentals.
Mm-hmm.
And so, the fundamentals don't really change. Those values don't change. And so just stick to the fundamentals and then look for those undervalued opportunities, right?
Yes.
So if you need to do some rebalancing in your portfolio, and if there is going to be some selling and buying going on, if you do it in a disciplined way and find those undervalued, right? And those
Mm-hmm.
undervalued ones are likely to be out there because the point you made earlier is when the market reacts, it sells the good stuff with the bad stuff.
Right.
So there's that good stuff that's out there and it's undervalued. But if you take the right approach, you'll be able to find those. And so, historically, markets recover, and they recover during a relatively quick period of time. And so, and then at the same time, success doesn't come about by avoiding volatility. In fact, that probably leads to less wealth and less success over time.
Right.
But it's really taking a methodical approach, understanding it, and then taking advantage of it.
Right. Absolutely. One of the things that we know is that by achieving gains is by buying low and selling high. But in reality, what we know from behavioral finance is that people tend to buy high and sell low. They panic and out of fear when the markets drop. And so they sell when it's low, or they follow the crowd and hear about a stock that's doing really well and they buy when it's high. So it's really important to resist those kinds of urges.
Yeah. I've always had the belief, if I'm hearing through the grapevine or online or other things about a hot stock, I've already missed the opportunity. And so the truth is probably the same here as well. And so it can be careful just to follow the crowds either up or down.
Right. Now, as we discussed, there are opportunities, but it's important to be selective during a period like this. Not fear, but it is important to be selective, because the truth is that not everything that's dropped is worth buying. So it's super important to assess your portfolio and really determine, are there any opportunities for tax loss harvesting? Or are there any securities in your portfolio that maybe you have an opportunity to minimize your capital gains, but they're not necessarily well suited to the current economic environment? And that's one important thing, is that it's important to look at current economics and not just what the market is doing, but to really look at the economy and the strength of the individual companies versus what's going on in the market, because the ones that are going to rebound, the ones that are going to come back strong, are those that have those strong fundamentals.
That's right.
So with that, you want to, I would say at a period of time like this, you want to avoid those that have strongly trade sensitive risks, those that might rely on some of the international stock in order to get, or international supplies in order to complete their products. And then look at those that have clear long-term growth strategies and growth projections. So it would be important at a time like this to focus on large caps, the essential sectors of the economy, again, that are doing well. And then, of course, ensuring that your portfolio is well diversified.
Yeah. So that's some really good advice. The mindset reminder is to think like a business owner and not a gambler, right? And
right.
So and said another way, a business owner is going to think long term and what's healthy for the business, and by doing that, they're going to minimize emotions and fears, right, and think more strategically. Whereas a gambler really is really going to act on emotion, right?
Yes.
Use short-term thinking, things of that nature. So definitely you want to think like a business owner, not like a gambler. And so I think the key takeaway is, throughout this kind of volatility that we're seeing, in this case through tariffs, it's an opportunity to look critically at your portfolio. Absolutely. And analyze, and probably even if you're not concerned about your portfolio, there's a good chance that the risk that you had in your portfolio, that balance has changed as a result of all the volatility. So if nothing else, it's probably worth it for you to take a critical look and analyze your portfolio, determine what in there is worth keeping and I need to hang on to. Are there some things that maybe I should get rid of? And for most people, it's probably going to be a small portion of their portfolio. But are there some things I should sell? And if so, what are the best buying opportunities? And there's probably some good buying opportunities out there.
Right.
So Cheri, Yeah. So any last thoughts before we move on?
Just, making sure to tame those fears and to recognize that it's not 100% bad news, right? That there is opportunity here to identify opportunities within the market, opportunities within your portfolio, and try to move forward in a positive manner.
Yeah. And so, Cheri, one of the things we do at Client First Capital is we help investors know, what's the best action to take. And so,
Mhm.
if you're out there and you feel just maybe a little bit frozen on, what should I do? I would say reach out to us and let us we'll be happy to take a look at your portfolio and analyze the amount of risk that you have in there and help you point out some opportunities as well. And so you can reach us at clientfirstcap.com. And from there, you can set an appointment or just give us a call. Also, you can see there's a link to sign up to our newsletter. It's one newsletter a month that we send out that has market insights and other valuable articles. And then also, you can get a link to videos like this. And then if you found this video helpful, give us a like, and it helps other people find the video as well. So thank you for joining us, Cheri. Thanks for your insights. Appreciate your time.
Absolutely. Thank you, Cary.